I'm going to tell you the best UK dividend stocks that pay quarterly so that you can add it to your portfolios and hopefully get monthly passive income. All of these stocks are also on FreeTrade and Trading 212 as well, as it was a viewer request. Disclaimer, I'm no financial advisor. If you seek financial advice, please see a licensed professional. The first stock on this list is a tobacco giant named British American Tobacco. BAT has a dividend yield of 7.55%. They typically pay in February, May, August and November each year. BAT has currently got a payout ratio of 81%. And whilst this is high and could mean that there's limited dividend growth, this is a very mature and globally exposed company. They have less growth potential, and the tobacco industry has very high profit margins of around 22%. This is a sustainable amount to have and will be continuing to grow their dividend in the future. And in fact, in the last 20 years, they've managed to grow their dividend each and every year. Whilst 2017 looks like a dividend cut, it's due to a change in dividend frequency. And in the last 10 years, they've managed to grow their dividend by an annual compound growth rate of 6.3%. This is a more defensive stock that can secure you that dividend income in times of uncertainty, like a black swan pandemic event going on right now. Although my only concern is that in the future, tobacco may become less wanted. As we're becoming a more health conscious civilization, it feels like tobacco is slowly going to be pushed away. And whilst at the moment, yes, they can charge more and more for their products, eventually there's going to be a point where perhaps tobacco could die off. However, if you disagree with me, then this could be a perfect income stock for you. And if you'd have owned this stock in the last 5 years, you would have seen returns of 1.5% with dividends reinvested, and that does beat its industry but loses to the market of 17.5%. The renewables infrastructure group has a dividend yield of 5.2%, typically paying in March, June, September and December every year. They currently have a payout ratio of 58%, which is an excellent position for growth as they can continue to grow their dividend and also reinvest the money into their land ownership and infrastructure. And they have extremely high profit margins, which shouldn't decrease unless we see renewable energy prices continue to drop. But even then, it's high profit margins, and so they can continue to grow their dividend and pay higher. Trig has only been paying its dividend since 2013, and their growth rate isn't that great. It is beaten by inflation, as in the last 5 years they've managed to grow their dividend by a compound annual growth rate of 1.87%. I imagine as they start to establish themselves more across the UK and Europe that they will hopefully start to grow this at a faster pace. Regardless, it does seem a very strong defensive hold to have, if not. And at the moment, it already has a dividend yield of 5%, so that dividend growth isn't as important. If you'd have owned this stock in the last 5 years, you would have seen a return of 72.1% with dividends reinvested, which outperforms the market of 17.5%. And right now, only 40% of you watching this video are subscribed. So if you're interested in my UK stock portfolio, stock picks, stock analysis, please consider subscribing and smash one of these, as it is free. Thank you. The next company manufactures and sells a range of products in the consumer sector, such as beauty and healthcare, foods and refreshments, and also home care. Have a dividend yield of 3.41%, typically paying in March, June, September and December every year. Unilever do, however, have a high payout ratio of 76%, but once more, this is a very diverse and grown and very mature company, and so they don't need to reinvest that much money back into the business to continue growing. And the way they reward shareholders is by paying them a strong and reliable dividend, in which over the last 20 years, you would have seen a consistent, reliable dividend growing at a fast pace, as shown by its last 10 years compound annual growth rate of 7.73%, which beats the target for the rate of inflation set by the Bank of England by nearly 4 times. And currently they've got a partnership with Alibaba's cloud so that they can learn the digital marketing process, and in return Unilever can get exposure and growth to the Chinese market. So this stock does have growth potential as well. And if you'd have owned this stock in the last 5 years, you would have seen returns of 76.5% with dividends reinvested, outperforming the market of 17.5%. My favourite company on this list manufactures and distributes miniature figurines under the Warhammer brand and also video games. Games Workshop currently have a dividend yield of 1.6% and typically pays in January, March, September and November each year. GAW have a current payout ratio of 50.5%, which I believe to be in an excellent position, as they've got plenty of cash to reinvest back into the business and also room to grow their dividend. And with their earnings growth that they have, this will likely downtrend over time. However, in the last year, due to the pandemic, they have cut their dividend by 6.47%. And whilst this dividend has had very large volatility over the last, in their history, I do believe that this will start to flatten out and therefore see a great dividend growth stock. And even due to this volatility, in the last 10 years, you would have seen an annual compound growth rate of their dividend of 19.22%, which is greater than most dividend stocks in the UK, and also provides great capital growth potential. As in the last 5 years, if you'd have bought this stock with dividends reinvested, you would have seen a return of 2,241%, completely destroying the market of 17.5%. And even if this stock performs 10 times as worse in terms of share price, that would still be 200% returns, which still destroys the market, making it a strong capital growth stock and a strong income in a dividend portfolio. And if you're interested in my Boohoo stock analysis, then click the card at the top right of the video. Thank you for watching. I'm Osborne Foreman. See you Thursday at 4 PM.